Most people think that it's because the Federal Reserve is raising the interest rates, raising the federal funds rate. That's actually not the case at all. Now, mortgage rates have been going up before the Fed even increased the Fed funds rate, or is going to. At the time I'm filming this, they're saying they're going to raise it 50 basis points tomorrow. So we'll see if they actually do it, which you'll know by the time you watch this video. Now, the real reason mortgage rates are going up is because the 10-year Treasury yields are going up. Now, there is some correlation to the federal funds rate and the 10-year Treasury, but there are also other factors, hence the reason that rates have gone up before the Fed even raised rates. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and for this video, we're gonna be talking about the fact that mortgage rates are starting to soar, markets are beginning to cool, and the real question is, what does that mean for you? What can you do about it? What does that mean for your investment portfolios, for your real estate value? What should you be on the lookout for? And ultimately, how is this all gonna play out over what time frame? And while I think the answer is nobody really has a crystal ball, I'm gonna get into the evaluation of what I think it all looks like and how it's all gonna play out next. All right, so let's get into this. First off, let's just be real. The market needed to cool down, right? We were never gonna have 15% annualized real estate growth every single year like we've had over the past couple of years, especially considering the fact that COVID kind of pushed us into this, right? This is not the end of the world. However, the question is, what does it mean for you? Now, let's take a look at why the mortgage rates are going up the way that they are, because most people think that it's because the Federal Reserve is raising the interest rates, raising the federal funds rate. That's actually not the case at all. Now, mortgage rates have been going up before the Fed even increased the Fed funds rate, or is going to. At the time I'm filming this, they're saying they're going to raise it 50 basis points tomorrow. So we'll see if they actually do it, which you'll know by the time you watch this video. Now, the real reason mortgage rates are going up is because the 10-year Treasury yields are going up. Now, there is some correlation to the federal funds rate and the 10-year Treasury, but there are also other factors, hence the reason that rates have gone up before the Fed even raised rates. Now, between the United States' poor economic policy with money printing, between the supply chain issues, inflation, the contraction in the economy in the first quarter that we just saw, this is not a good sign for confidence when it comes to markets in general. Now, while the central bank has stated that they're going to continue to raise rates because they need to counter inflation, and while I personally believe there's little chance that they're going to do this, and while the central bank has stated that they will continue to raise rates because they need to counter inflation, I personally believe that there's little chance that they're actually going to raise the rates as stated. Now, they may try to raise the rates initially, but ultimately I think they're going to cower when the rate hikes that they implement out of the gate here hurt the economy. This is what happened back in 2018. They raised rates, it hurt the economy, and they had to drop them again. Here's the deal though. While I think the economy is going to head into a recession, I think there's also going to be a break in correlation, a disconnection in correlation between the stock market and the real estate markets. Now, if you remember going back to 2008, we had crashes that were fairly equal in both the real estate markets and in the stock markets. That's because investors were over leveraged in collateralized debt obligations and mortgage-backed securities. And they had a ton of exposure, investors had a ton of exposure in the real estate market. We then had the kind of perfect storm on a downturn in the real estate markets when the market was flooded with inventory, right? And at that point, all it took was a 4% downturn to topple the entire economy. So what I want you to do is take a look at this chart. What you'll see is the 3 years headed into the Great Recession, we had 3 of the highest years of new home completions on record over the past 50 years. So while the housing market is beginning to cool, I don't think it will crash. Why? Because if you look at the past 13 years on this chart, we haven't even hit the 50-year average once for new home completions. Now, that made sense for the first couple of years after the Great Recession as the economy needed to rebound. But since 2014, for the past 8 years, we have not built nearly enough houses. Then to make it worse, when we finally began building houses, we had the pandemic, which ironically made supply even worse because nobody wanted to sell their homes. Nobody wanted anybody to enter their house, right? So then when you tack on the fact that the supply chain issues that ensued as a result of the pandemic made the cost of building new homes go through the moon. I mean, the cost of building a new home right now has skyrocketed through the roof. We normally have about 1.5 million homes listed for sale on the MLS nationwide. Right now, we have about 600,000. That's a lot of inventory to make up for. That's 900,000 houses. That's why I say I'm extremely worried about the stock market. While I'm extremely worried about that market downturn, I'm not so worried about the real estate downturn yet. With interest rates increasing, and I believe they're going to continue to increase because they have to, a little bit at least, I think that'll cause prices in the real estate market to flatten out in the short term. Now, normally, if you just look through history, increasing the rates like they already have would have been enough to crash the market. But as you can see, the market is kind of showing that it has no interest in crashing. So I think the market will continue to cool off and level off to more normal levels until the supply catches up or at least gets closer. Now, realistically, that could take a while. Even if the stock market takes a downturn and demand for new homes reduces because people don't have as much money or they don't have the confidence, it doesn't mean the real estate market is going to crash. Think about it this way. We could have demand for houses drop by 33%, go from 1.6 million to 1 million. And if we had 1 million houses on the market, that still means we're going to have a massive imbalance of inventory to make up for. We need to create an additional 400,000 homes from where we're at right now. That is a ton of homes to be able to have to put on the market to make up for that gap. Now, that said, we will make up for that gap at some point in the future. Now, based on the research I've been doing, my guess is that gap is going to be made up for within the next 18 months to 4 years. Now, I know that's a big window, but when that gap is made up, that is when I believe we're going to see a massive housing correction. And statistically, that simply means the housing values are going to come back to the long-term mean growth curve, which simply means it could be a 20 to 30% correction depending on how long it takes for this cycle to play out. If you want to stay on top of this information and learn more about what you can do to prepare personally, make sure you subscribe and hit the bell. That way you're notified every single day. I release one YouTube short and one video on personal finance and the economy every single day. If you have any questions, make sure you leave it in the comment section below because I do my best to engage with every single comment I can. Until next video, have a blessed, inspirational day. We'll see you tomorrow.